Jai Hind, dear students, and welcome you all to the online class of Shri Ram Public School. And I am Babita Pandey, your teacher of Accountancy subject. Once again, welcoming you all in this online medium of learning. I hope you all would be fine in this pandemic time, but you should be careful and minding about your health and studies also. Please, as a student of class 12th, it is my humble request to you all that be careful and be regular about your studies. So, in today's video, we are going to discuss about some major points of dissolution of a firm. The chapter which we started in our last lecture, that was dissolution of a partnership firm. So, this is the last chapter of partnership accountancy. So, today we will discuss about some points or some general entries of dissolution of partnership firm. Okay, so first of all, what is dissolution of partnership firm? That I have cleared you that winding up the firm's business either voluntarily or in a compulsory manner is called as dissolution of partnership firm. So what is the process of accounting treatment on dissolution? Suppose that if we are going to wind up a partnership firm, so what procedure, as an accountant, what procedure we have to follow while doing the accounting for such a firm? See, here we have 4 steps. Here we have 4 steps for that. First one is realization account. We have to make a realization account. The process of realization account we will discuss in detail in our coming lectures. Second one, partners capital account. We have to settle the partners capital account also. Then partners loan account, and then fourth one is cash or bank account. Okay, so these are the things which when the firm is closed or when the firm is dissolved, these are the things which we need to do as an accounting process of that dissolution of firm. Okay, now moving further, in the next topic we are going to study about journal entries on dissolution of a firm. What will be the journal entries on dissolution of a firm? Later on we will discuss about the ledger format or the ledger account that we have to make at the time of dissolution. First we will discuss about the journal entries. So for journal entries, first we will be focusing towards the transfer of assets. For transfer of assets, how we are going to deal with the assets of that firm. So if we are going to close a partnership firm, we need to settle all the liabilities and we need to realize all the assets. For that, one single entry is being passed, that is the realization account debit to various assets account. Individually we will mention each and every asset like fixed asset, debtors, building, whatever are there, we will mention those assets as in individual manner and with the book value. Here we will write down the book value. Okay, so mind the first entry, realization account debit to various assets account. This will be the first entry for carrying down the assets from balance sheet to realization account. Here it is mentioned we are having such assets in our balance sheet and we are going to carry forward these assets in our realization account. So this will be the entry, realization account. Debit side we have noted down, so realization account, debit side, okay, debit it will be, and to all the assets at book value, we will mention it at book value only. Okay, but one major point which we should consider, not only one, there are few points which we need to mind before mentioning all the assets. See, here we don't need to mention cash. We will not mention cash, and preliminary expenses are not transferred to the realization account. Why? Because the prepaid expenses or the preliminary expenses which we have paid in advance, that cannot be returned and cannot be realized in cash. Okay, and cash is already in cash, that we need to pay some liability. So this is the first point. We don't need to mention, or we don't need to transfer cash and preliminary expenses to the realization account. Okay, hope you would have understood. Second thing, yes, coming on the second point, see, here are a few points which we need to mind. Cash or bank is not transferred because it does not require realization. As I told you just now, cash is already in cash, that is considered as liquid assets. So we need not to realize that amount, and that is why it will not be mentioned in realization account. In realization account only we will mention those assets which we can convert into cash. That is why it is going to be transferred to realization account. So next point is assets against which a provision or reserve has been credited should be transferred at its gross figure and not at its net figure. That is, many times in my previous lecture also I told you that while mentioning or while transferring the assets from balance sheet to realization account, we need to mention those assets at its book value only. Okay, the book value, gross figure. We need not to mention the net figure in that side. Net figure, that is the exact market value of these assets, will be mentioned on the credit side on realization account, that we will discuss further. Next thing is goodwill appearing in the balance sheet is treated like any other asset and is transferred to realization account at book value. If we have mentioned goodwill in the balance sheet of the firm, so it will be debited to the realization account as the book value only. Okay, at the book value. If any amount is realized for goodwill, bank or cash account is debited and the realization account is credited, like any other asset we used to do. If means while carrying out those assets to realization account, we will mention goodwill also. Mind it, if the goodwill is written in balance sheet, okay, then we will carry forward that amount of goodwill in realization account at the debit side only. And when the goodwill will be sold out and it will be realized in cash, that amount will be mentioned separately on the credit side of the realization account. See here how we are going to pass these entries. Here it is mentioned, you can see that particulars on transfer to realization account. While transferring to realization account to goodwill account. But when the goodwill appear in balance sheet, mind it, if it does not appear in balance sheet, then no entry will be passed. Second thing, if it is realized in cash, then what will happen? If it is realized in cash, then bank or cash account debit to realization account. Now realization account is credited, okay. But if goodwill is mentioned in balance sheet, and if it is not mentioned in balance sheet, then also we will, because the money is coming, cash is coming, it is the inflow of cash, so we will mention this entry also, same entry as like here, bank or cash account debit to realization account. Now third one, if one of the partner agrees to pay for goodwill, Then if any of the partner agrees to pay for goodwill and takes away the goodwill, then in first case, when the goodwill is mentioned in balance sheet, we will have an entry of that concerned partner's capital account debit to realization account, and if it is not mentioned in that balance sheet, then also we will have same entry for the adjustment. Okay, so these are the journal entries for adjusting or for maintaining the goodwill. Once again, I am repeating all these things. If goodwill is mentioned in balance sheet, then we will carry that goodwill amount mentioned in balance sheet on the debit side of realization account, and if it is not mentioned in balance sheet, then no entry is passed. When it is realized in cash, then we will have journal entry, same journal entry in both the cases, whether it is mentioned in balance sheet or not. We will have cash or bank account debit to realization account, same entry for both the cases. And third one, if suppose any partner takes away all the goodwill and pays for that goodwill, so that partner's capital account will be debited because he is paying off that amount, and realization account will be credited because it is the inflow of money. In both the cases, we will have same entry. So this was the accounting treatment of goodwill. In both the cases, I have explained you. Now coming on the next topic. Yes, now we are going to have one example based on this situation. See, E and F were partners. They decided to dissolve their firm on 31st March 2015. No goodwill appeared in the books. Show journal entries in the following alternative cases. If goodwill realized at rupees 45,000, and if goodwill was taken over by E at an agreed value of 54,000. Okay. Here we need to mind what. Let's see. First one is no goodwill appeared in the books. That means we need not to pass first entry which we have studied just now, that is goodwill account debit, realization account debit to goodwill account. We need not to pass that entry, but we have to pass that second entry, that is cash account to realization account when the goodwill is realized into cash. That is the first case. Goodwill is realized for 45,000, and if goodwill is taken over by any partner, then the third entry will be passed, that will be E's capital account to realization account with the same amount. Okay. One more thing I would like to remind you all, that in absence of any information regarding realization of intangible assets like goodwill, it should be assumed that no amount has been realized from such assets. Then we need not to mention that asset in our realization account. Okay. So that was relating to the transfer of assets to the realization account. In our tomorrow's lecture, I will clear you the topic of transfer of liabilities. Tomorrow we are going to study about the transfer of liabilities to realization account. And for today's homework, you have to solve all the questions related to the topic. Students, be careful about your studies and don't show carelessness about your or negligencies towards your studies, because for that only you have to pay for that and you have to suffer at the end. So hope you will be paying attention, full attention toward your studies, and be regular about that. That's all for today's video. Thank you.